Hello and welcome back. This is David from the Personal Finance Squad. Thanks for joining. We just finished section 2.8, closing down a month. We looked at some scenarios of moving money around to cover bills that came in over the projected amount and how to balance them out with money that wasn't used in other projected items. This leads us into section 2.9, money transfer between accounts. So what we're talking about here is the supplemental account, which we talk about quite a bit. So what we want to do here, I'm going to underline this piece right here, and note that it's important that it is tracked properly, right? The supplemental account is a way that gives us a backup, a bird's eye view of knowing what's there. What's there means that money in the supplemental account can be used to backfill other bills in the account, even if they're not tracked as supplemental items. So what we're saying here is we look at these items in here, okay? And this was a supplemental item as well as trash. So now we can look at something like childcare. So what happens with childcare is, and we'll go through these exercises in the next chapter, chapter 3, is that there was a projection of $300, right? The actual came in at $266.08. And you can see we have $33.92 remaining. So what do you do with that $33.92? And as I always say, you can choose to put that money aside. You can choose to spend it, but that's not what we're going to do here. This is a little different. Because again, in chapter 3, and we go through some of these various bills, the larger bills in our budget, is that we're going to find out this projection here is something that is actually derived again from the full year's plan of what this money should be. So for example, with childcare, we're saying that's going to be $300 every month times 12, thus is $3,600. Well, this $3,600 number is derived from planning out the entire year. So therefore, what we see here is this $33.92, that's actually going to go into the supplemental account, and childcare will have its own line item to track it. Now, on the inverse, gas utility, this is also something we're going to go project out in future chapters, is that it was projected at 50, comes in at 81, is a negative balance of 31. And as for the rest of these, they've all balanced out. They're all zeros. So in that case, with the gas utility, it's going to need $31 from another source to cover it. Okay? So what we need to do is protect a new line item to track it. So let me get my pen here. So what we say is we have an overage, right? And the money will come from the supplemental account to balance out the budget to even it out. So we see right here, for example, we've added a little grid here, kind of a made-up grid rather. And we have a base budget item of 50, which we know about. And we know that, again, it came in at a negative 31 because of the $81. So what we're saying here is when money from the supplemental account is needed, it's going to come out of there, and this is the new line item. So now that we put this $31 in here, these will cancel each other out. Hence, again, we talk about matching every income with every expense. We end up with a zero balance. What we want to look at here is the supplemental account itself. So we showed in the last section there about moving money back and forth, but we really didn't show where it came from. So obviously, with all the talk of supplemental, we actually need to have a spreadsheet. We have looked at it in subsequent videos, but we want to see how this actually works in real time in a sense. So the important thing to remember about the supplemental account is that because it's not being paid to a creditor or service, meaning any of those bills that are in the supplemental account, they can be handled at the end of the month because they don't have a technical due date. And that allows for the mandatory bills to be addressed first. Those are the bills we know are coming out, such as a car payment. So again, you get a budgeter's discretion, if you will, like if that's a term. And again, that creates cash flow ability. So knowing that the mandatory bills are covered first, then you can worry about these at the end. So what we have right here is a sample supplemental account. And you can see here, this is blown out a little bit more from what we saw in the beginning of the chapter about handling the supplemental in terms of creating the grid and tracking each month. In this particular case, we can see that Childcare has 104 for January. Gas utility at 77. So what has happened here is that in February and March, both of these bills needed more money pushed into their accounts to cover them. So we took out $40.08 and $3.08 in March, and the tracking balance now is at $61.76 and $4 respectively for gas utility. So you can see the benefit by putting this money here up front. Allows for the money to be here for other purposes when the bills come short. And coming short means that there's going to just be months of that because it varies. But remember, we're doing a 12-month plan, and we will again go through scenarios where it shows how to balance this. So the whole point is you will balance and you will have the money in. So there will also be months where you actually come under, and that money goes to the supplemental account. So it's just an exchange medium to cover the bills to keep them to a flat and zero. That keeps your budget rather fixed, and that's what's important. That's what we're trying to achieve here and will achieve. So again, in terms of how you track and use your sheet is all up to you. You may just want one column here and it just could say balance. So let's say it just said balance and you had 104.92. Well, rather than just taking 40.88 and crossing it out, you simply could just subtract it from this. And then hence with the 308, you could subtract it from that number, and you could have the 61.76 standing by itself. That's a much simpler and cleaner way to do it. However, some people like seeing things built out in their full entirety, so it might just be a couple more steps in your grid. You can certainly make in Excel a add, subtract, or a sum rather, the sum feature. So if you just subtracted 40.08 and 308, it would just automatically calculate for you. And we can look at that later as we go through the book in terms of how that would look. So again, we're just kind of reiterating here what we're talking about with money going back and forth. So we say in the table below, childcare and gas utilities received upfront cash in the beginning of the cycle budget plan to pay for future fluctuation payment cycles to mitigate negative balances in accounts. So what we're saying right here is, again, I keep saying this, but we will go through exercises about how to develop this. But at the beginning of the budget, sometimes money's going to have to be put in up front to establish these accounts or these line items in the accounts. The good thing is once they're established, you never have to go back and do this on a yearly basis in terms of the upfront money. It's just to get the cycle going. So here's an example we talked about a few minutes ago where the projection was 300, the actual was 266.08. So 33.92 goes to the supplemental. And then we just looked at the gas utility a few seconds ago. That was in the hole by 31, and it comes from the supplemental. And hence, the back and forth exchange of money balances out those accounts. So this information over here gets in a little bit of how we established accounts, but we just talked about that, so we can go through that. And again, we're going to get to the chapter review now. That's our next section, because this will conclude our chapter. We have come a long way. We are now getting to the point where we have a budget set up and we can go look in terms of the expenses, the supplemental, and the income. So we will go to the chapter review next, and then after that we're going to get into really developing build-outs for the higher end or higher amount bills to create them for their supplemental balances as well. So again, thanks for joining, and I will talk to you in the review.